Ladies and gentlemen, good day and welcome to Q2 FY26 conference call of Lords Chloro Alkali Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Smith Shah from Adfactors PR. Thank you, and over to you.
Thank you. Good afternoon, everyone, and thank you for joining us on the Q2 and H1 FY26 results conference call of Lords Chloro Alkali Limited. We have with us Mr. Ajay Virmani, Managing Director, and Mr. Madhav Dhir, Executive Director. Before we begin, I would like to remind that certain statements made in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q2 and H1 FY26 results presentation that has been uploaded on the stock exchanges. I now hand over the call to Mr. Ajay Virmani to begin the proceedings. Thank you, and over to you, sir.
Hello, everyone. I am Ajay Virmani, Managing Director of Lords Chloro Alkali Limited. And I welcome you to the maiden conference call of the company. I'd like to begin by thanking you for taking our time.
I'm sorry, sir. Your voice is a little muffled. Can you just repeat, please?
Yeah. So, just in the beginning, and I was welcoming everyone for joining in to the call. Today's call is very special for us. It marks the beginning of the chapter. Yeah, okay. Sorry for the interruption. Just to reintroduce, I'm Ajay Virmani, Managing Director of the company. I hope I'm coming out clear, and loud to everybody right now. So today's call is special because it is beginning of the new chapter for us, where we not only share our financial results, but also the strategic transformation and long-term vision of the company. So this company was incorporated in 1979 by Modi Group of Industries, and this company was operating. Then we took it over in 2006 under the BIFR scheme, and then we, revitalized the company. So we this facility is on 84 acres of land in Alwar, Rajasthan, and we make caustic soda, chlorine, hydrogen, bleaching powder, and CPW and HCl. So the products which have very, very wide applications into many industries, which are the building block of any economy, into paper, alumina, textiles, soaps, and pharma and other chemicals. Over the last few years, Lords Chloro has undergone a significant transformation from a traditional chemical manufacturer into a modern sustainability-driven company. We currently operate a plant which is 300 tons per day of caustic soda and 50-ton plant of CPW, and HCl also around 200 tons per day. The CPW capacity is being ramped up to go to 100 tons per day. Also, the other capacities are also increasing, but I'll ask Madhav to touch upon these later, after me on our future expansion plans and the numbers. The expansion in all this will enhance captive chlorine consumption, improve cost stability, and strengthen our downstream product mix. Energy is a critical cost for our business, accounting for nearly 55% of the total production cost. So, taking cue from this, we took a major step in financial year 25 by commissioning a 16 megawatt renewable solar plant in Bikaner, Rajasthan. So it is meeting almost 10% of our power requirements, resulting in annual savings of around 12 crores and reducing our carbon footprint by around 17,000 tons, equivalent to planting 8.5 lakh trees every year. Building on this success, we have acquired a 26% equity stake in a hybrid energy park of being operated by Continuum Energy. So which will give us 10 megawatt of hybrid energy of solar and wind put together. This will, bring in additional around 12 to 15% of our power requirements. So our renewable footprint will go to around 25%. Additionally, we are now embarking upon additional 21 megawatt of solar plant So our renewable footprint will go up to 40 to 50% of our power requirements. The transition will make us one of the few chemical companies in India with such a high renewable energy share, while stabilizing margins and reducing exposure to energy price rise. Together, these initiatives are helping us evolve into a green chemical company. Probably, we would be the only company having almost 40 to 50%, green footprint, caustic soda, I would say, having 40 to 50% green footprint in India or anywhere in the world, maybe. So if I'll just touch upon, the industry in general in India. The total capacity is around 6 million tons, and the production is 5.5 million tons. The capacity utilization factor is around 85%, which is, the worldwide is also around 82 to 83%. Indian industry is operating at a very good level. When we say 85%, since the capacity is counted on 365 days, 24/7, so the plant shutdowns for maintenances and everything, so 85% is like utilizing it to full. So the whole industry is operating, at a very reasonable and a very, good capacity utilization. The worldwide demand is around 102 million. So Indian, production is roughly around 6% of the total world demand. So India has a lot of catching up to do with the world. China is around 44 million tons. India has announced almost 2.5 million tons of capacity expansion coming up in the next 3 years, with lot of, chlorine tie-ups on PVC side. So we see, India emerging onto the world scale in caustic soda and chlorine, capacities. And also now for the last 2-3 years, India was an importing country for caustic soda, but now India has become an exporting hub. This year, we should be exporting nearly 1 million ton of, caustic soda all over the world. And the share of Indian caustic soda is going to increase over the years, as a lot of European capacities are shutting down because of high energy cost. So which is going to be a very good, for the Indian industry and the expansions which are coming up in India. So what I'll do is now I'll just pass on to Madhav to explain about the capex which we have done and the capexes which we are going to do and touch upon the numbers. I'm sure numbers are with you people. We declared the results yesterday, so you must have seen the numbers. But anyway, we'll touch upon all that. Over to you, Madhav.
Thank you, Ajay. Good afternoon, everyone. As Ajay suggested, everyone actually has the numbers, so I'll just quickly take you through the financial performance of September 30th, 2025. So, total income for this H1 was 201 crore, which is a growth of approximately 59% year on year. Operating margins also significantly grew in H1 FY26 to about 20.76%, or equivalent to 41.78 crore. Profit after tax also significantly recovered from H1 year on year, and because they were subdued in last year. Now, moving to the second quarter performance specifically, total income stood at about 100 crores in Q2, similar to Q1, and in comparison to year on year, it was 60.86 in Q2 FY25. EBITDA for this quarter stood at 21.09, similar to last quarter as well, and EBITDA margin for this quarter stood at about 20.93, which is healthy numbers. Notably, we reduced our energy costs per ton significantly from 51% to 39%. This is due to the solar plant that we set up, as well as the energy mix reducing because of addition of CPW as against revenue. As a result, the profit of this quarter stood at about 9.04 crores in comparison to 0.36 Q2 FY25. Looking ahead, a strategy is built on clear 4 priorities. First, through cost leadership through renewable energy. We are on track, as Ajay mentioned, to reach about 40 to 45% and 40 to 45% in renewable power integration, which will make our operations significantly more efficient and sustainable. So I would now like to briefly talk about the capex journey we've had over the last 1 or 2 years, what's ongoing and what will go on subsequent to our announcements yesterday. So in terms of our CapEx journey, between FY 24 to 25, we have invested approximately 150 crores, primarily in expansion of caustic soda from 210 tons per day to 300 tons per day, CPW from 20 tons per day to 50 tons per day, and the 16 megawatt solar power plant based in Bikaner. Ongoing and current projects approximately amount to 40 crores. This includes CPW capacity expansion from 50 tons per day to 100 tons per day. Significantly, after seeing the results from the power that we are taking from Bikaner and our captive solar plant, we entered into a power purchase agreement and a share purchase agreement with Quantinum to supply us 10 megawatts of wind solar hybrid. Together with these projects, 25% of our energy will be from renewable sources. Subsequently, I would like to talk about the CapExes that we have announced yesterday and how our renewable mix will be subsequent to those CapExes as well. Yesterday, we announced a further CapEx of 165 crores, which includes expanding our caustic soda from 300 tons to 400 tons. However, we will be also shutting down a 40 ton per day Udai plant. This plant was a little more inefficient compared to our other electrolyzers. As such, our total installed capacity will be 360 tons subsequent to the expansion. We are also adding sulfuric acid, not only as to diversify our product mix, but also for the steam generated through sulfuric acid, which might bring down our costs in the boilers. We are also adding another solar power capacity of 21 megawatt. Again, this is in captive use. This will also help reduce our cost and roughly bring our renewable power mix to between 40 to 50%. The total capex outlay for these three projects is approximately 165 crores. And put together, between FY 24 and 28, the total capex amount is roughly 355 crores. So I appreciate for everyone's time regarding the capexes. I will hand over the call to Smith if he has any inferences of anything or sort.
Should we start with the question and answer session, sir?
Yeah, please do.
Yeah. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Shubham from RV Investments. Please go ahead.
Hi, sir. Am I audible?
Shubham? Shubham, we cannot hear you.
Hello.
Yes, Shubham. Please go ahead.
Hi, sir. I want to ask you, what are your capex? You have given the guidance of 165 crores. Can you please divide up in these financial years, like how much you will be implementing in H2 and then FY27?
See, all these projects have a gestation period of 1 year to 18 months. So the capex will start. In fact, the capex, will be starting from now, and the project commissionings would be spread over. The solar plant will get commissioned over 6 to 7 months. The other plants may take 12 months to 18 months to come up. So the capexes are going to be spread over, in the next, let's say, 3.5 years.
Okay. Hello.
Yeah, I hope you heard me correct.
Oh, can you please repeat the last sentence, sir?
So I said that, the project commissionings are going to start. The solar will get commissioned by March, April. And the other plants, will take almost 12 months to 18 months to get commissioned. So the capexes will also happen, as per the progress of the project. So the money will keep getting deployed over the next, maybe 4 to 5 quarters or so.
Okay, sir. And what are your revenue guidance for FY26 and FY27 as you are increasing the capacity again?
Can you repeat your question a little louder, please?
Sir, what are your revenue guidance for the coming year and the coming half of the year as you have said that you will increase your capacity from 300 to 400 tons per day.
See, that capacity will come up, next year, sometimes in the third quarter.
Yeah. So basically...
So for the next 3 quarters, we would expect the same kind of revenue to continue.
Okay, basically 100 crore, that's what I mean.
Augmented only, then the revenue will go up, right?
Okay, sir. Thank you.
Yeah.
Thank you. We'll take our next question from the line of Prachi from Phillip Capital. Please go ahead.
Hello, sir. Congratulations on good set of numbers. So also, what is your view on caustic soda prices currently? So do you feel now it has been bottom out? And with that 4-year cycle, how overall, if we see the realization per kg also, it has been dipped a little bit if we compare quarter-on-quarter basis. So last quarter it was 47, now it has gone to 46. So what are your view on that? And second question was on, do we expect stability in the EBITDA margin going forward? Since we are now coming up with a solar plant as well. So, yeah.
So, this 4-year cycle, is been holding true for many years, but, the world scenario is changing a lot. Because of Mr. Trump and, a lot of, capacities being coming or getting scrapped in China. So of course, but the price has been pretty steady for the last, I would say, 3 quarters now. So we can say that the last year was bottoming out. So now I feel that, upsurge has started into the price. Prices, I feel, are going to be pretty stable, in the next few months or so. Because it's a commodity you can't predict for a very, very long time. But I would say in the coming, at least say 2 quarters, the prices are going to be pretty stable. And your other question was about the, renewable bringing stability. Of course, when, as Madhav mentioned that, the cost of power is around 50-55%, which is now coming down because of renewables. So naturally, any vagaries of prices in Indian or international markets will get even out by the renewable footprint. So it will bring in, at least stability to the profitability of the company, for sure.
Okay, thank you.
Prachi? This answers your question, right? Okay, thank you. We'll take our next question from the line of Poojan Shah from Molecule Ventures. Please go ahead.
Hello,
Can you use your handset mode, please, Poojan? Your audio is not very clear.
Am I clear now?
Yes, please go ahead.
So just wanted to understand your view on caustic soda expansion. So we understand that we are shutting down a 40 TPD plant, and additionally incremental, the new capacity will be coming in 60 TPD. But just wanted to understand the dynamics, because few 2 giant companies have been announcing their caustic soda expansion already. I understand that their use case is to ultimately use the chlorine for the PVC part, but wanted to understand your view, because if we look at the 6 million tons capacity in India as well, which is operating right now at 80-82% utilization, I still feel that the caustic soda in India is in suffering in terms of pricing. So just wanted to know why we are expanding specific in caustic soda. Is it due to value addition products which we have been incorporating, like CPW, or it is we are seeing something else in terms of market?
I tell you, so I'll be a little elaborate on this. So the Indian market, works in, as far as we go, in 2 islands. One is the West Island, other is the North Island. So North Island is north of India and west of India. So we are in north of India. All the capacity expansions which are coming up in west of India. So if anybody has to bring the material from west to up north, we'll have to spend almost 6,000 to 7,000 rupees as a freight on caustic soda. which roughly is around 25 but 22% of the cost of caustic soda, which is very, very huge. So it becomes very prohibitive for any Western player to come to and sell it in North India. The demand for caustic soda, like I mentioned, 6 million ton is the capacity, and we are operating around 80 to 85% capacity utilization, which is like 100% capacity utilization. So the demand is growing at around 5 to 6% every year. So that means we are adding roughly 1/3 of a million ton every year. All these capacity expansions which are coming up, the Reliance may be starting next year end, and Adani in 27, 28. So by that time, the Indian demand would have grown by almost a million ton or little more. And they both are coming out with 2 million tons in phases. And India was exporting only, 500,000 last year, which is going up to 1 million this year. So the India is also, expanding into the worldwide trade. India is taking more and more share of the export market. Like I mentioned in the beginning, that European capacities are shutting down because of high energy costs. And both these, high capacity plants of Adani and Reliance are on the port, and they're best suited to take the advantage of, the European market. So, of course, there will be some, upheavals, when such a big capacity comes in. But I see that maybe, upheaval of a year or two, then the things will smooth out because Indian economy is also growing. And caustic soda is one product which is very well linked to the, growth of an economy. All the products which are done from caustic soda are very, very heavily linked with, the growth of economy. And secondly, if there will be some dip in, caustic soda prices, the chlorine prices should be able to make up for it because these two plants will use all the chlorine captive. When we say that the caustic soda demand is going up, by 5 to 6%, in the other way we are saying that, even the chlorine demand is also going up by the similar number because you can't produce caustic without chlorine. So when we are doing that, so where the extra chlorine is going to come from? So the price of chlorine we expect to go up when the caustic capacity comes in. So as far as the ECU number goes, the chlorine and caustic put together, I don't foresee, much of a dip there. So I think things will even out with the capacities and demand taking care of it.
So just adding to this point, so understanding how much chlorine we have been using captively, it is 100% right now?
No. We roughly, I would say, we sell almost 40-45% of our chlorine outside, to the other customers.
Okay, got it. And sir, you have been mentioning about the European capacity being closing out in phases. So just wanted to know what is the European capacity right now, the installed capacity, and what you have been reading is how much capacity is been planned to get shut down, or so what is the broad criteria you have been looking into? Because ultimately the demand would be coming to the eastern countries like China or India, so that could be the only case. So just wanted to understand the European side.
See, the European capacity, as till last year was around 12 to 15 million tons, but was, almost I think 300 to 400,000 ton capacity has shut down already this year. And the operating rate of the European plant is 60 to 70% right now because of the energy cost is very high. So even if, slowly, I think they will not be able to compete, and almost 10 million tons of, demand, which is there. Maybe another additional 5-6 million ton will shut down, and 5-6 million they will keep producing because of the integration of their products with the plants, because some plants need chlorine, for operations of the chlorine derivatives. So I foresee that, a lot of demand will come from Europe that way, almost 4 to 5 million tons over the next, few years. No, of course, India will not take everything of it. And then a lot of, demand is getting created in Far East. Indonesia, and Africa have become a big, hubs for Indian exports also. It is not just the Europe, but Indonesia and Australia also, for that matter, where we are competing with Japan and China. Africa also is now consuming. A lot of industrialization is happening in Africa, so the products are going there also. Right now, India is exporting to almost 55 countries around the globe.
Got it, sir. And just to understand the expansion part, so we have been planning to spend around 165 crores amount in expansion. So just wanted to know how we are planning for it will be internal accruals, it will be debt funded, how it will be?
See, the whole 165 crore is not just for expansion. Quite a part of it is for the solar plant also. And naturally, it will be a mix of, debt and equity. So, we haven't decided because it will all depend on the internal accruals of the company. So, but definitely some debt will come in. But what is the mix of debt and equity? I think it is yet to be, finalized.
But there is no intention to raise by equity, right?
We have a warrant issue coming up, which will, I think the January is the last date for, completing that warrant issue. So there, around that warrant issue was for around 44 crores. 25% of it has already come in. So I see that 32 crores of money coming through the equity route also.
Got it, sir. I just want to understand the Chinese economy. There has been right now anti-involution been going on. So do you think that would be benefiting us in coming 1 to 2 years? Because always the Chinese guys are always strict about their norms and regulations. I just wanted to understand that part.
I missed out your first two lines about the China thing. What did you say?
So China has been right now focusing on anti-involution, in which they have been deciding to close down or shut down the capacities which has been incompetent and making losses. So just wanted to understand, do these capacities being shutting down will be benefiting to us, or it will
China is a very, very opaque wall, one thing. But whatever, I have studied, because I was the president of Alkali Manufacturer Association for 2 years. I completed my 2 years just in September. So I've been well entrenched into the world market on this. So I'll tell you that the capacities, they have shut down, but they're shifting capacities. China is a big country, so they are moving to remote areas, for hazardous chemicals. So the total capacity in China has not come down. Rather, they have announced almost 4 million tons of capacity over the next 2 years. So their share was around 41 million tons out of the total world of 101 tons, which is expected to go up to around 45 to 46 million tons in the next 2 to 3 years. So whatever is shutting down, the new capacities are coming up in the remote areas and bigger capacity plants.
Got it. Last question would be on the power commissioning, which we expect in next 6-7 months. I just wanted to understand, after the commissioning of the additional power solar grid. So just wanted to understand, will it be 25% of an internal consumption will be from power, or it will be less than that?
I'll ask Madhav to come up.
So we have currently a 16 megawatt solar power plant in Bikaner that contributes to about 10% of our energy. We've also signed a share purchase agreement and a power purchase agreement with a company called Continum, which will provide us 10 megawatt wind solar hybrid, which will additionally contribute 15% to our renewable energy mix. In total, we'll be at 25%, subsequent to which we have also announced yesterday another 21 megawatt project in Bikaner. Put together, that will add another 15% at least. So at that point, in approximately by April, May, we'll be at 40 to 45% of renewable energy.
Okay.
The intent with renewable energy is not only necessarily carbon saving, it is also the fact that it improves our cost structure entirely, because our caustic soda plant primarily takes electricity at the moment from the grid, where the grid rate is significantly higher than the price at which we generate electricity through our solar plants and or purchase electricity through Continum Group Capital project.
Got it. Last bookkeeping question would be, what is the current ECUs right now prevailing in North?
It is around 37,000 rupees.
37. Which was, what was on QOQ and YOY basis? Can you just share that?
I see, offhand, I can just say that for the last 2 quarters, it is on a similar lines, or I would say for the last 3 quarters. This and
Okay.
2 previous.
Okay. Okay, got it, sir. Thank you so much.
Thank you. We'll take our next question from the line of Shubham Padiyar from RAS Capital. Please go ahead.
Hi, am I audible?
Yes, please go ahead.
Yeah. First of all, I want to congratulate the entire team of Lords Chloro Alkali for the great performance till now.
Thank you.
And I just had a suggestion. If we can segregate revenues based on caustic and other products, because I feel chlorine derivatives are getting higher realization than caustic. So if that's possible, it would be a great help.
You want to understand as to what is the revenue stream separated caustic and chlorine? That is what was your question?
Yeah. I mean, so currently this quarter we had, right? So if we can just, bifurcate caustic revenues and if other, let's say, chlorine products. So just to understand the realization.
Majorly tell you, I can very broadly tell you that caustic and its products constitute majority of the revenue. The other revenues are not very high. What is the CSL value? About 80% of it. So it's around 80% of this quarter. The caustic soda revenue is around 80%. So the other revenues, do not have much, kind of impact on the profitability, and because chlorine as it is a negative product, and whatever we make out of it, say we make CPW, so we are able to get positivity on that. Otherwise, chlorine, whether in West or anywhere in the world for that matter, except US, is a negative product.
Okay, understood. And also, so since you said a lot of demand might be coming from Europe, so are we planning to do any exports anytime soon, or we're just going to focus on North Indian market only because of cost advantage that we have?
Good. See, being in Alwar in Rajasthan is good and bad both ways. Good is that nobody from West can come and sell in North. And that way, the similar way, it is very difficult for us to export because we have to pay a similar kind of rate if we have to export. So, it may work sometime if somebody is willing to pay a premium for the green caustic soda, which we are going to be making in future. So if you get a premium, yes. But if somebody says, fine, I'll give you only a preference, but not a, kind of any price advantage, then the exports may not work out for us. I don't foresee it working out for us in the short term, because we are able to get a better price in our North market.
Understood. And just one last question on the solar capex that we are doing. So what would be the probable payback period for these capex on solar power plants?
It's pretty good. It's very encouraging and pretty good. I would say the time period is going to be much shorter than a normal industrial product is, because there is a huge difference between the grid price and the power which you produce, solar power produce. So the payback is going to be much faster than a normal industrial. The normal industry, we expect 6 to 7 years for it to pay back. This should be quite accelerated, from that.
Okay. So, I mean, I'm assuming it might be lesser than 5 years. Is that correct?
I would presume so, yes.
Okay. Yeah, that's it from my side. Thank you.
Thanks.
Thank you. Next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good morning, sir. Thank you so much for taking my question. Hopefully, I'm audible.
Can you use your handset mode, please, Darshil?
Yeah, just give me 1 second.
Hello. Hope this is better.
Yes, please go ahead.
Yeah. Hi. So a lot of my questions have been answered. So just one point I wanted to understand. So we are saying a lot of solar power will come online by April 20, in the April or May month. So going forward, like our, margins should be even better than what we are doing right now, right? Like, because we've already reached nearly 19-20%. So what could be the, margin that we can expect?
I would prefer not to give a percentage claim. I would rather say that we do expect EBITDA margins to improve significantly subsequent to the solar project commissioning, other than any vagaries that comes from the price sensitive of commodity chemicals like caustic soda. So if all else remains the same, EBITDA margins should significantly improve subsequent to our solar plant coming online.
Could you, if possible, just give me a range or, in terms of power cost, how much would we save per unit or something that would just help us if that's possible?
I would hand over the call to Ajay ji.
Hi. Yeah. So you see, the grid rate is around 8 rupees right now, landed power. And the contracts, the solar contracts which are happening, around for, CapEx thing, are roughly around 2.75 to 3 rupees. And the, OpEx contract which we did with Continuum is 4.5 rupees. So you can see that there's a vast difference between the grid power and the power which we produce. So then it all depends on the percentage points, that how much we are able to convert to CapEx, OpEx, it's a combination. And then how much we are able to, reduce the grid kind of dependability on the grid power. And then, like Madhav said, that, we may gain here, but we may lose if the prices go down. So we are actually trying, to have a stable trend line on the profits by coming out by, increasing our renewable footprint. So of course, the more and more, it is a question of choice of going CapEx or OpEx in future, which will have different cost points and different, then the average landed cost will happen depending on the percentage of renewable we are able to bring in.
Okay.
The price points on what you produce and what is the OpEx price and what is the grid price.
Okay. Fair enough, sir. I also just wanted to know with regards to, the CapEx that we did in FY25, the 90 TPD caustic soda. So that's completely utilized, right now? It's working at full optimal utilization, right?
Yeah. Like I said, 85% capacity utilization all over India, so the same as ours.
Oh, okay. So basically, till the new CapEx comes in, like the one that you're trying to do for the, the 100 TPD and the sulfuric, our revenue should be range bound depending on caustic soda prices, obviously. So is that a fair assumption, sir?
See, I would ask, you and because we look at the whole picture in two parts. One is the revenue part and the other is the cost part. So sometimes you focus on revenue, sometimes you focus on bringing down the cost. So all this, projects which we are announcing and we are saying have two parts built into this. One is, increasing of the revenue. The other part is bringing down the cost. So the bringing down cost part will be faster this time because of the solar plants getting operational earlier, easier to operate, easier to commission comparatively. So naturally, till the time the other capex is, complete, the revenue side, the total top line may not increase, but of course the bottom line will be helped by the solar plant. So when you are looking at our company, kindly look at it, from both the sides, not just don't evaluate it just by, if you have a stable top line, does not mean that, the bottom line may not go up. It is not linked to the top line, increase.
No, no, I understand that. Yeah, that's why I wanted to know about our savings from solar plant. So that's just wanted to get an overall picture of the company for the next year. That's all.
So what happens? Yeah,
Yeah.
what happens is that the top line capexes will take a little longer to materialize than the bottom line capexes.
Oh, fair enough, sir. Fair enough, sir. Just last bookkeeping question from my end, sir. What is our effective tax rate? Because I think last year was around 25%, but this quarter it's 36%. So just wanted to, get what will be our average tax rate going forward?
The average tax rate is around 25%. Just that we had some, carry forward, losses from previous years, which got, absorbed in the last quarter. So this time the tax incidence is little higher than the previous quarter.
Oh, okay. Fair enough, sir. Yeah, that's it from my side. So thank you so much. All the best.
Thanks.
Thank you. Next question is from the line of Manoj Rajani from Rajani Family Office. Please go ahead.
Hi, am I audible?
Yes, please go ahead.
Yeah. Thank you so much for the opportunity and congratulations, sir, on the good set of numbers. Sir, just wanted to ask one thing that I guess we had a capex of about 100 to 150 crores within 1 or 2 years. So just I guess this question has been asked. Wanted to understand the debt to equity mix of this particular capex.
Between 152 crores was the total capex, about the capex that had just been completed last quarter. So
Okay.
I believe it was 60 crores was internal accruals and 92 crores was debt. I have our CFO with us here as well. Is that it? 90 crore from term loan. Okay. 90 crore term loan, sir, and 60 crore internal accruals.
Yeah, actually that leads to my second question, sir. So just wanted to understand what is the optimal debt to equity mix that we are looking at? Since I can see in the presentation, in the first presentation of 2023 that the ratio was about 0.09 and right now it's about 0.6 if I'm not wrong. So just what is the management to maintain
I'm sorry,
it?
you're muffled, Manoj. Can you just repeat the last part?
Yeah. So I'm just saying that what is the optimal equity ratio that management is aiming at?
See, we are trying to keep it around 1 for our future, extensions also. Maybe little over 1, but not too high. I think 1.2 is a very, very comfortable, debt equity ratio. Normally the companies are operating at 1.5 or so, but we do not plan to touch 1.5 at all.
Okay.
So
All right.
I think with the future capex also, we should remain in the region of around 1.1 or so.
Okay. And also, I actually joined late, so sorry if this question might be repeated. What would be the payback period of our solar plan? That
I think I explained that in the previous question only, but I'll just repeat it very shortly. I would say it is very, very accelerated to a normal industrial payback. Normal industrial payback is around 6 to 7 years, but it should be below 5 for a solar plant.
Okay. And sir, just one last question. So since it's a commodity-based business, so that there must be price fluctuations in our products. So any plans to move towards any high-value products?
Don't
in a gradual phase?
Don't think so. We have a lot of mileage to cover in caustic soda and its domain. We are studying a few products, but all are on drawing board stage as of today. So right now we are concentrating on our own products which we do. There's a lot of market and scope to expand in this, which is what we are doing right now.
And I think the intent is to build a significant margin within this business itself. I think that is the primary goal, is to focus on caustic soda and allied chemicals, as well as building a very good margin within this business itself prior to moving into new business. As Ajay mentioned, we do study it, but they're all on drawing phase, and we have a long way to go primarily in building margin and building revenues from caustic before moving to other avenues.
Understood. And what kind of numbers we can expect this year? I mean, margins.
The 2 quarters, we are almost 200 crores, and since no capacity is getting added into the next 2 quarters, you can, I think if the prices are similar, they go up and down. There might be a little up and down in the top line from 100 CR of this quarter. So roughly, it should hold, and we can look at a number of 400 crore or little plus on that.
Okay. And what is our capacity utilization at the moment?
Almost 80 to 85%.
Okay. That's quite optimal. Yeah. That's it from my side, sir. Thank you.
Thanks.
Thank you. Next question is from the line of N. Modi, an individual investor. Please go ahead.
Yeah, good afternoon. My question is regarding other income. This quarter we have shown 242 lakhs as other income, and in 6 months we have shown 269. So is it regular in nature?
No, this is a one-time thing. It was a scrap sale because, when we did the CapEx last time, a lot of, old, things were dismantled. So, the metal prices have gone up. These are old pipelines or things like that. And so we were able to fetch a good price. So this is a one-time thing, not every quarter thing.
Okay. Other things have already been answered. This was one question.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Okay. Thank everybody for taking out time and showing interest in our company. And our company is well on the way to progress, both ways, increasing our footprint in the, market share and also, increasing our profitability by controlling our costs in a big way. So hope to, be and talk to you many more times in the, coming year or so. And, we then can monitor the progress of our company together. So I'll give it to Madhav to, say a word or two thanking everybody. Thanks.
I thank and appreciate everyone for their time and for joining us on our maiden earnings calls. It was definitely our first call, but we expect to hold earnings calls. So please request everyone to join us, as Ajit mentioned, to monitor the progress of our company after every quarterly results. Appreciate everyone's time, and if you have any further questions, you can always reach out to me personally or Adfactors through Smith, and he will be sharing his email ID shortly and mine. So if there are any follow-up questions, we are happy to answer them as well.
Thank you, sir.
Thank you.
Yeah. On behalf of Lords Chloro Alkali Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.